AMC stock has been the ultimate battle from $3 to $3.50 back to $3, and the meme crowd stock is at it again, trying to push this thing higher. We think the shorts, the ones betting against AMC in the long run, are going to be the winners here. Let's take a look fundamentally at why we think that. So those trying to push shorts in AMC want to see a really high short squeeze S3 ratio. This ratio sometimes gets as high as 80 or 90, only 33, and you can see right here, the short total in AMC is actually headed down. So those who are trying to meme stock squeeze this higher are actually fishing in a pond that isn't as great as it has been in the past. Let's go back to the dark days for AMC. That would be COVID. They have $11 billion in net debt here. And in COVID, they did just $1 billion in revenue. It's going to be impossible to pay back all the debt. And you can see, look what happened to the net income. Lost $1.2 billion and $1.3 billion in negative free cash flow. That is as bad as it gets for AMC. Let's take a look at what's going on now, though. If you've been watching our videos and want to invest alongside us,
click the link in the comments. Select your brokerage.
Search for ticker RVER wherever you buy stocks.
Thank you, and now back to our video.
So here's the good news post-COVID. Obviously, revenue has gone back up call it $5 billion currently as theater sales come back. The debt pile is still very large, though, $8.3 billion. This includes some leases, and they've kicked some back to further duration, essentially, but they still have to pay this money off to someone, whether it be a debt holder or a leaseholder at some day. Take a look at 2024. You can see the EBITDA on the $4 billion in sales, just $1 billion, and they still cannot squeak out a positive net income. Take a look at what's expected in 2025. The growth is helping a little, but it's just a little, and you can see that net income still net negative here, and free cash flow is too. The problem with AMC's business model isn't that they can't sell movie tickets or popcorn, it's that the theaters cost way too much money to build. You use debt to build those theaters, and the net income coming from the movie business isn't quite enough to pay off this bottom line. So it is our opinion that the shorts are going to win here eventually. This $8 billion debt pile is a lot to get repaid, one movie and one bucket of popcorn at a time. We think that eventually the negative net income is going to weigh on this equity, and AMC is going to have to go bankrupt with a $0 equity, and the shorts end up winning. Thanks for watching. Appreciate everything you guys do for us. Like, subscribe, all that stuff. It's been fantastic, and if there's anything you want to see, let us know.